How do you make smarter financial decisions in 2026 when money management has moved from simple budgeting to high-tech strategies? You no longer need to rely on just math skills or keeping track of every cent. The digital age has made managing money both easier and more complex. Have you ever wondered how to stay ahead in a world where data is at your fingertips, but making the right decisions feels harder than ever? Mastering these 8 financial skills will give you the tools you need to navigate this new reality and make smarter decisions with your money with less stress. Let's dive into these skills that will make you not just good with money, but exceptional. 1. Prompt engineering for personal finance. In 2026, managing your finances isn't just about tracking spending anymore. It's about communicating with your money through the use of advanced AI tools. Think of it like having a personal financial assistant that can analyze, strategize, and even predict your financial future. The skill of prompt engineering means knowing how to ask AI the right questions to unlock valuable insights from your financial data. Imagine being able to ask an AI tool to analyze my spending over the past 3 months and find out where I am leaking money, or compare the tax implications of a Roth conversion versus a taxable brokerage contribution. These aren't just theoretical examples. They're practical queries that can save you hours of manual work while offering high-level insights that help you make smarter decisions quickly. Mastering the skill can save you time and effort and allow you to use your financial data strategically instead of just tracking it passively. In a world where information overload is the norm, this skill is like having a compass to guide your financial decisions with precision. 2. Variable expense smoothing. A common struggle when it comes to managing money is dealing with lumpy expenses. The unexpected large bills like car registrations, annual insurance premiums, or holiday gift shopping that disrupt your monthly budget. These can feel like financial emergencies, even though they are predictable events that happen regularly. That's where the skill of variable expense smoothing comes in. This skill involves calculating the total amount of all non-monthly expenses in a year, like car insurance, property taxes, or annual subscriptions, and then dividing that total by 12. By doing this, you create a sink fund contribution, a savings pool that you can draw from throughout the year. It's a strategy that ensures you're never caught off guard and allows you to focus more on building wealth rather than managing short-term financial surprises. 3. Real yield calculation. The standard way of looking at savings is often focused on the nominal return, the percentage rate a bank offers for your savings account or a bond. However, in a world of inflation, that nominal return doesn't always equate to real growth in your wealth. The skill of real yield calculation allows you to understand the true return on your investment, adjusting for inflation and taxes to reflect what you're actually gaining in purchasing power. To master this, you simply subtract the current inflation rate and your effective tax rate from a nominal interest rate of an investment. For instance, if your savings account offers a 5% return but inflation is 3% and your tax rate is 25%, the actual return on your savings is only 1.5%, 5% to 3%, 25% of 5%. By calculating the real yield, you stop chasing high interest rates that don't actually help you build wealth. This skill helps you choose investments that provide real returns, protecting your money from inflation and increasing your wealth over time. It's a crucial skill to develop as we enter a future where inflation is a constant concern. 4. Behavioral self-nudging. Financial success isn't just about knowing what to do with your money. It's also about creating habits that make managing it easier. Behavioral self-nudging is a skill that involves tricking your future self into making better financial decisions. It's all about designing your environment to make the right choices automatic, rather than relying on willpower, which often fails. For example, you can create friction for bad habits by unlinking your credit card from shopping apps, making it harder to impulsively buy things you don't need. On the other hand, you can create flow for good habits, like setting up automatic transfers to your investment accounts or automatically investing a portion of your bonuses. This skill is about setting up systems that encourage positive financial behaviors and reduce the friction that makes it hard to stick to your financial goals. Over time, you'll notice that your habits will align with your long-term financial goals without requiring constant effort. The result? You can focus on the big picture, growing your wealth, while your systems take care of the day-to-day tasks. 5. Tax efficiency location strategy. In the world of personal finance, it's not just about what you own, but where you hold it. The tax efficiency location strategy focuses on placing the right types of assets in the right types of accounts to minimize the taxes you pay over the long term. For example, you wouldn't want to hold tax-heavy assets like REITs or high-turnover mutual funds in a taxable brokerage account, as they would be taxed every year. The key here is understanding which assets are tax-heavy and which are tax-light, and then placing them in the appropriate accounts. For example, you can keep tax-efficient assets like index funds or stocks in taxable accounts, while placing tax-inefficient assets like bonds or high-yield funds in tax-sheltered accounts like Roth IRAs or 401(k)s. The result is that you reduce the tax drag on your investments, allowing more of your returns to stay in your pocket. Over the course of your lifetime, this can mean a 10 to 20% increase in your keep home pay from your investments. It's a strategic way to build wealth faster and smarter, allowing you to keep more of what you earn. 6. Digital asset sovereignty and security. In 2026, much of our wealth is tied up in digital assets, whether it's cryptocurrency, online bank accounts, or even virtual properties. Protecting this digital wealth is now more important than ever. The skill of digital asset sovereignty and security involves knowing how to safeguard your digital assets from theft or loss. This includes using hardware wallets, understanding multi-factor authentication (MFA), and knowing how to freeze your credit across all bureaus in case of security breach. This skill also involves understanding how to protect your assets from platform failure. By mastering digital asset security, you prevent a single security breach from wiping out years of disciplined saving. This is an essential skill for anyone building wealth in a world where digital risks are increasingly prevalent. 7. Value-based spending audit. Budgeting traditionally focuses on cutting costs, but the skill of value-based spending audit takes a more strategic approach. Rather than looking at how much you spend, this method focuses on the utility of the spending. Does it genuinely add value to your life? The key to mastering this skill is periodically ranking your recurring expenses on a scale of 1 to 10 based on how much happiness or time freedom they provide. For example, a gym membership that you use regularly might rank as a 10, while a subscription to a magazine you never read might only rank as a 3. By identifying expenses that truly enhance your life and cutting the ones that don't, you make your money feel more powerful and align with your values. 8. Interpreting economic noise. In 2026, the financial world is flooded with information, from market predictions to economic fear-mongering. It's easy to get caught up in the noise and make decisions based on short-term headlines. But the skill of interpreting economic noise allows you to cut through the hype and focus on what really matters. This skill involves distinguishing between temporary market corrections and long-term fundamental shifts in the economy. When the market dips, it's important to ask yourself, is this a temporary pullback or is this a sign of something more serious? By developing this skill, you can avoid falling into the trap of panic selling during market corrections, which can destroy long-term wealth. The result? You can stay the course during market volatility and avoid making impulsive decisions that could harm your financial future. This skill helps you remain calm, focused, and strategic in a world full of distractions. And there you have it, the top 8 financial skills that will make you smarter with money in 2026. From using AI tools for smarter financial decisions to implementing a value-based spending audit, these skills will help you navigate today's complex digital economy with precision and confidence. If you found this video helpful, don't forget to like, share, and subscribe for more insights on mastering your finances. Let me know in the comments which skill you're most excited to master, and I'll see you in the next video.